The NFL season is officially underway, and I've got 12 stocks here, actually 13 with a bonus, to consider at these prices and lower. Now, I realize the elephant in the room. Today we had CPI, and it was a little bit higher than expected. The market is giving back a lot of its run. If you look at what the market did, it ran really hard going into the CPI report. So far, it's given about half of that back. So we're looking at stocks here today. The dollar cost average through the month of September and October. These are long-term investments. They're high-quality stocks for the most part. There's a couple specs in here, but many of these pay dividends. You got to remember they are consumer focused, a lot of these, because we're focused on stocks that could benefit from the NFL. So you're thinking of fans that might spend more money. And of course, we go into recession, there's going to be less money to spend, less disposable income. But I think that these stocks, they have some resilience, but of course, keep in mind the economy will impact these stocks, and as the market gyrates. I like these stocks regardless of the NFL or not. I think that there's some benefit from the NFL season, and I thought it was a fun idea to bring to the channel. I'm very excited about football. I used to play college football, been addicted to NFL football for as long as I can remember. So without further ado, let's look at 12, actually 13 stocks that could benefit from this NFL season and beyond. Now, the first stock is Nike, and I've liked this stock for a while. I like it for a lot of reasons, and I've owned it for quite some time. Now, under $100 is really where I like this stock. It did get there on July 1st, down to $99.53, maxed out here, topped out at November 5th, 2021 at $179.10. P ratio is a little bit high. It's close to a 30. The dividend in this is 1.0856%. Short interest is only 1.18%. So Nike, of course, will benefit from shoe sales. And you think of football season, so a lot of people are buying cleats, but you also have jerseys and things like that. And you can buy a jersey from any team. You can personalize it, anything you want, basically. But these are $130, $160 for a jersey. You know, again, this is more for fun, this idea. It's not that just the NFL season alone is going to make Nike a buy. It's a buy with or without the NFL season. But I think that there are some benefits coming into the 2022 season. And these are stocks, again, that could benefit, that will see some increased sales over the next couple of quarters throughout the NFL season. SoFi, I like this thing when it gets to $5 in that $5 range. It's $5.96 right now, down 7% today. It got down to $4.82 on May 10th. The high on this was $24.65 November 11th, 2021. Of course, this is not profitable, doesn't have a P ratio. It's trading a little bit over a one price to book, so it's trading like a bank here. It does have pretty strong growth, especially when you compare it to other banks. It blows them out of the water. So of course, when you think of SoFi Stadium, this is where the Chargers and the Rams play in Los Angeles. They also have, other sporting events there, college football. They even have music venues and things like that here. But SoFi benefits, I think, for market brand recognition from the sponsorship. It's expensive. It's controversial. They're spending a lot of money to be on SoFi Stadium. But it does bring, I think, new customers, especially when you think of the fan base. They're going for the younger demographics, which are very into NFL football. They're into their apps. They're into, fantasy football and DraftKings and things like that. So SoFi Stadium, and I did see a couple different advertisements when I was watching football, NFL Sunday and opening kickoff. SoFi Stadium was advertised quite a bit as well. I think they're going to continue to grow their market share. These guys cover everything from personal loans, student loans, everything, cryptocurrency, investments. They're very diverse. It's a fintech company. It's also got a bank charter. I think this stock will continue to do well. I think it benefits from the NFL season. This is one that's really strong, that really sticks out to me because I do think they will get more market share because of the advertising from the NFL football season. Amazon, it's my top holding. I've owned it for quite a while. It's $128. I don't love it at $128. I think $125 or less, dollar cost average. It got down to $101 on May 24th. High on this was November 19th, 2021 at $108. Of course, they had a stock split. P ratio is 122.7. So Amazon benefits, I think, AWS. AWS has been advertised quite a bit on football, and the NFL uses Amazon Web Services for all their statistics. So you'll see that quite a bit if you're watching. They also have exclusive rights to Thursday Night Football. Now, it used to be that it was on multiple channels. For a while, it was on NFL Network. It was on other channels as well. Now it's only going to be on Amazon Prime. And so when you think of the new Lord of the Rings series, you think of Amazon having Thursday Night Football exclusively, I think you're going to see more people sign up for Amazon Prime, and I think they could benefit from this. Now, you're going to to see a theme with all these stocks because I like these stocks regardless, again, if the NFL season's on or not. But Wingstop, I don't love Wingstop at $141. So I want to be clear on that. This thing actually got down to $67.67 May 24th. The thing's up quite a bit. It's over a double from its lows. So you have to be a little bit careful. If this thing did pull back though, if it got back down to say $110, $115, I do like it in that range. It's interesting because it's a 109 P ratio, so you might look at it and say there's no way it's a buy right now. And I agree with you. It's not a buy right now. It's a buy if this stock comes lower. But Wingstop's been advertising quite a bit. They now have their chicken sandwiches. When I watched NFL on opening kickoff, I saw Wingstop commercials quite a bit. I don't recall seeing those in previous seasons. So just something to keep an eye on with Wingstop. This is one of my favorite DJIF stocks. It has a 10.76% short interest. So I do think this stock will come lower. I want to put it on your radar so when it does come back, you have an opportunity to add when it gets to attractive price levels. Now, this is a really tough stock. I used to own the stock. I no longer own the stock. Of course, at $9.77 May 12th, that was very attractive. I think 15 and under dollar cost average, it's at $17.29 right now. This thing was a $62 stock, $63 stock back September 13, 2021. I'm not saying it's going to go back to all-time highs anytime soon. It's still burning a lot of cash, no PE ratio. I get all that. DraftKings, though, will benefit. They are advertising a lot. Right now, they have a deal. You bet $5, you get $200 instantly in cash. The thing is, I tried doing that and I couldn't do it. It doesn't work in my state, but it does work in several states. It's a pretty good deal. That's gonna accelerate their cash burn, but it is going to get people on the app, get more people addicted, unfortunately, to the app. So when I look at this, there's a lot of competition. That's the main reason I don't really own DraftKings anymore. I've burned too much cash for this environment and way too much competition. So I'm gonna give you two more stock picks that could benefit from sports betting, sports gambling. DraftKings would be probably my favorite one. Another one I see like Jamie Foxx advertising this one quite a bit. MGM, it says a 5.05 P ratio. I think it's pretty attractive here, especially if it gets to like $30 or less. This one could do really well. And then the last one, this is going to be more of a kind of a bonus pick. Caesars Entertainment, kind of a bonus pick here, down 7%. It's at $46. The low on this was $35. So I think $45 or less, kind of dollar cost average. This one does not have a P ratio. This is just a bonus pick. But I think these sports betting apps will benefit not only from NFL, but just other sports as well. We have all of our COVID restrictions completely, dissolved. Sports are back. Fan bases are back. I think you're going to see more and more of this. It's one thing when you look at disposable income, you don't have money to do things like gambling. But statistics show that actually the sin type stocks, when you think of the MJ stocks, the beer stocks, you think of gambling stocks. If we get into a recessionary environment, those type of stocks, those companies generally benefit because people are kind of down on their luck and they kind of take risks and they can bail themselves out. Now, I don't support that. And there's some of you that say that's awful. I'll never own a stock because of that. It's against my morals. I totally understand it, but it is at least it's something I need to cover on this because it makes sense. When you think of stocks that could benefit from something like NFL, sports gambling is huge. It's going to continue to grow, and all three of these companies will benefit over time. Now, Disney has a monopoly when you think of ESPN because Monday Night Football last night was on. The only way you can watch Monday Night Football is if you have some sort of subscription, whether it's through cable or like Fubo TV or what have you. It's kind of confusing and it actually irritates me because I wanted to upgrade my Disney Plus and include Hulu and ESPN Plus. ESPN Plus doesn't actually have Monday Night Football. You have to have live TV, so that's really confusing. But I do think that ESPN will continue to benefit from sports like the NFL. This is traded at a 66 P ratio. I like the stock a lot if it gets back to $100 or less. It might not get there. It's at 111. It was $90.23 in the low July 14th. The high on this was 185 September 17th, 2021. But I do think Disney is a good pick here because of ESPN. Now, this was on my favorite dividend stocks to buy, in September at these levels and lower. And I said under $35 dollar cost average. Comcast, it's paying a 3% dividend yield for the first time in history. P ratio 11.64. I like this stock with or without the NFL. But a lot of people, they're either going to do streaming or they're going to do something like they're going to get cable to get NFL. People will pay up during the season to get their packages so they can watch their football. I did it myself, and we'll get to that later in the video. But Comcast benefits for several reasons. You think of Comcast, they own NBC, so you think of Sunday Night Football. There's a lot of different reasons that Comcast benefits from sports rights. You like the NFL, they also own the Olympics and things like that. But I like this stock anyway, and it does have some benefit. I think it's attractive because it's a really nice DGI, high quality, again, 11.64 P ratio with a 3% dividend yield. I like this stock at these levels and lower. And if you think, oh, well, this stock's going to go out of business because it's just cable, do some research on the company. They do a lot more than just cable. Now, this is spec only. I've never owned this stock. I've always been very hesitant of the stock. It was $35, and I thought that was insane. It got down to $232. Now, this is going to be a spec. It's high risk because maybe it goes out of business. It's hard to know. But what I will say is that I had Sling TV, and I wanted to upgrade to ESPN. This is why Disney was on the list earlier. I wanted to get ESPN. By the time I upgraded my Sling TV, I was paying the same as I would have with Fubo TV. And the thing about it, with Fubo, I got my local channels. Sling no longer has local channels. And if I compare this to YouTube TV or Hulu Plus, it's going to give you the most bang for the buck. There's a few, every one of these services have a few holes. For example, TNT is not on here. Things like True TV are not on here. And maybe you don't care about those, but there's going to be holes on every single one. Like, for example, there's limitations how many screens. With these guys, with the $69 package, I got 10 screens, and I got a great deal through Best Buy. I bought a $100 TV. I got an $85 Amazon Alexa. I got 1 month free of Fubo TV. I got 3 months free of Apple Plus TV. So it was a pretty good deal, $100, and I got basically $350 worth of stuff, and I signed up, got a free trial. I also got Red Zone channel, which you can get here. So this one could definitely benefit from NFL. There's also sports gambling involved with this as well. This is a higher risk stock. It's going to be considered a spec only. Now, I believe that either Apple or Amazon will have rights to NFL Sunday Ticket, and that DirecTV will lose those rights next season. So this is one of the reasons. Now, this video is focused on who benefits from this NFL season. I think Apple benefits, though, because they have the new iPhone 14 coming out. A lot of people like to watch sports on the go. And I think that this is just a good stock overall, you know, with or without the NFL. $129 was the low on this back in June 16th. I think it's a little bit expensive here at $156. I want it to come back maybe in the 140s or something like that. And it might not happen. This is one I've owned for a long time. 27 P ratio. It's really a market leader. You know, the market's going to live or die by Apple because it has huge market weight in things like the S&P 500 and the QQQ and so on. The dividend's pretty low because the stocks ran so high. It's only a 0.5629% dividend yield. But I do see a lot of headway, especially with these new devices, with the new iPhone having satellite connectivity, things like that. So Apple wanted to include this on the list as the 10th stock. Now I've got 2 more stock picks, but before we get to those, I need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/Fired Up Wealth. And a reminder, guys, Fool doesn't tell me what to make. I do these videos. They're a great partner. If you haven't subscribed to the channel, please do that now. Click that bell to get notifications. If this is helpful, drop me a like and drop me a comment. So another stock that was on my top dividend stocks for the month of September, and I like this one a lot, around $40 a share. It's paying, guys, it's an 8.59 P ratio, but it's paying 6.1% dividend yield. Especially if this thing does dip below $40, in my opinion, it's a no-brainer. It's a strong company. The balance sheet's, you know, not a bad balance sheet at all. It does have some debt, but look at the P ratio, 8.59. I mean, 6% dividend yield. In my opinion, this thing is undervalued at $42 a share. And I think they can benefit from things like sports in the NFL. When you think of wireless services, they also have things like cable communications and so on. So Verizon's a solid number 11 pick, especially for your income investors. If you're looking for income, this is one of the best stocks, in my opinion, to buy right now in the market. And of course, you're always going to see Budweiser commercials. You're going to see it at any sporting event, especially NFL football, for many, many years. And this thing is, you know, pretty close to the lows. Lows were September 1st, 2022 at $47.23. It's trading at $50 a share right now. 27.64 P ratio, 1% dividend yield. You know, it's a solid company, and, you know, obviously they're going to benefit year round, but the NFL, they do have an uptick in sales. People like to drink beer while they're watching football. So check out Budweiser, Anheuser-Busch, InBev as the 12th stock on the list. I appreciate your time and attention. I hope you have a great rest of your day. Take care.